Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories that we're tracking at 1:30 p.m. Markets off the day's low, led by sharp recovery in financials, but lingering concerns over tighter monetary policies continue to pressure stocks, even as the big earnings for the season kicks off today with TCS's numbers. FMCG, auto, industrials bear the brunt. IT fares relatively better.
The Jaiprakash Associates board decides to divest its significant cement asset, while its arm Jaiprakash Power Ventures will also divest its cement grinding unit. The deal will help lighten the group's debt.
Atul Auto is surging after the company announced a preferential issue of warrants worth 115 crore to ACE investors, Vijay Kedia, who is set to invest about 100 crores via the issue.
Gravita India and focus after Abu Dhabi Investment Authority recently buys stake, also begins commercial production of aluminium from a new recycling plant in Senegal. This plant has annual capacity of around 4,000 tons per annum and expect additional revenue of 60 crores a year.
Sonal, pretty good recovery, right, from the day's low. We started off with a gap down opening. The Nifty opened below that 17,100, and as we speak, we've climbed above that 17,200 mark. Though in the last 30 minutes, we've given up a bit of ground. But on the whole, again, no knockout punch.
Oh yes, it is looking decent so far. Of course, as you pointed out, it's a 140 recovery from the lows. Right now, sitting with cuts of 114 points, we have the Midcap index, which is underperforming today. So that one's sitting with a cut of 1.2%. And today, it's your sector, which is the only one in the green. Of course, you're waiting for the big TCS number. And it kicks off the earnings season officially. So bracing ourselves for busy days ahead. But for now, looking stable for the markets, except for IT. The other sectors are in the red today. And as I said, the Midcap side of things underperforming today. So let's go across to my colleague Vivek, who's going to be talking about all the stocks that are buzzing around in trade in our Midcaps Movers segment. Vivek.
That's right. So even though, you actually saw quite a bit of a weak opening, certain stocks that we are highlighting today, doing extremely well in the session. First on our list is EKI Energy. Now, this particular stock that actually deals in renewable energy certificates is doing extremely well in the session today on strong volumes. In fact, for this particular week, for the last 3 trading sessions, in fact, if you're looking at this stock, the stock is up almost 30%. Also, we have Fairchem Organics. Now, this particular month, this stock is up almost 24%. Having a look at Navkar Corp, this particular stock today is seeing very strong volumes and is seeing quite a bit of positive price action as well. And if you're looking at Aptech in the last 5 sessions has gained almost 25%. Again, worth highlighting given the strong moves that we're seeing in this particular name. Borosil Limited today, after a bit of a consolidation, today is gaining quite significantly. And Mahindra CIE continues its up move, 6th straight session of gains, and today trading at a fresh 52-week high. On the other hand, if you're looking at some of the stocks that aren't doing very well in the session, Piramal Enterprise continues its slide. Now, this particular stock down for the 3rd straight session, and today at a 52-week low. And some of the other stocks, we are also highlighting Birlasoft. Remember, in the quarter gone by, the company actually had come up with a buyback announcement at 500 rupees a share, but today the stock is sulking in the session and down quite significantly from that particular price. Some of the mid-cap pharma stocks, Unichem lags and Voca 2 are lagging in the session today, down 5% and almost 3.5% respectively.
Okay, thank you very much for that. Let's invite Himanshu Gupta of Globe Capital now for a technical check on the markets. Himanshu, afternoon. What have you made of this intraday recovery? The Nifty is around that 17,200 mark. Do you see, an up move from here on? Because there are signs of the rally fizzling out.
Good afternoon to you. Well, I think after a 250 points gap down, I think this was just a kind of a short covering that triggered once we saw that the markets did not witness any follow-up selling after the gap down. And clearly the way the financials and the banks actually led to this recovery, I think it was just a pullback rally for the day. And as the markets approached the crucial resistance zone, especially if I talk about Nifty, where 17,250, 270 odd zone remains the immediate area of supply, we have seen the markets giving up some gains. So for me, fresh longs would only be advised only above 17,280, 17,300 spot levels. While on the lower end, I think I'll be watching a close for today. In case we close below 17,150, 17,100 odd levels, I think there is a fair, decent chance that in the days to come, we might test that level of 16,850, 900 odd level before actually resuming any kind of uptrend. As far as Nifty Bank is concerned, in today's session, we have seen a decent amount of strength in the Bank Nifty. However, I would be looking to watch for a close above 39,300, 350 odd levels before I would like to commit any serious longs here also. So here also, I think 39,300 and 38,600, that remains the broader range for next couple of days.
And in that case, Himanshu, the levels that you spoke about, generally, what would your technical picks be?
I'll be going with a one long and one short recommendation. The short would be on Tata Motors. I think we have seen a quite long underperformance for this stock, and today the kind of weakness it's visible on the charts. I think there can be some more downside here. So Tata Motors is a short around current levels of 395, 396, keeping a stop above 403, and a target of 380, 375. I would be expecting in a day or two. The second one is a long on Bharat Forge. This stock is actually a stronger chart setup, and in today's session, again, a follow buying is seen. The stock has given a breakout above that 765, 770 kind of supply zone. So I think Bharat Forge, we can initiate fresh longs here for a target price of 800 in the near term, and the stop loss below 760 can be placed here.
Okay, all right, Himanshu, thanks a lot for joining us and taking us through your technical checks. Just by the way, take a look at HUL and Britannia. These two stocks are at the day's high. So is Nestle. So some buying from the lows in some of these FMCG names. Of course, overall, the markets and the sector not doing so well, but there is some recovery which we have been seeing in last couple of minutes as well. With that, we'll slip into a short break now. Up next, we'll be joined by Rituraj Sinha, who's the Managing Director of SIS Limited, to discuss the company's business outlook. Stay tuned. Hi, welcome back. You're still tuned into Midcap Radar on CNBC-TV18. The Midcap side of things, they are still not doing so well. So just watch out for that. Nifty has fallen further from the top. So it is up 103 points as we speak. But as we said, the stock in focus today is security major SIS. Rituraj Sinha, the Managing Director of the company, joins us now to discuss the business outlook and the demand scenario as well. Rituraj, good afternoon. Thanks a lot for joining us. Before I speak specific numbers, I just wanted to understand how the international business is doing, because in the quarter gone by, revenues are largely flat in the international business. Of course, the COVID effect is something that tapered down in coming quarters. What is the outlook here? Has there been a pickup?
It's a pleasure to be here. I think a quick update on the international side. As you know, international business now contributes less than 50% of our overall business. In the last 2 quarters, we have seen a few changes. Number one, the COVID-related temporary work has literally ceased now. So the high margin temporary contracts are out, and the routine contracts that had been downsized, there were lesser manpower being employed, they are back up. So business is actually reverting back to pre-COVID situation. One major development that has happened, very favorably for us, is that the Australian environment has seen the highest minimum wage increase in the last 10 years. So the Australian government had gone ahead with a massive minimum wage increase, which will augur very well for us once the full price revision happens in the next 1 or 2 quarters. But I think this is great news, for us.
Rituraj, can you explain why the higher wage revision which took place in Australia is beneficial? Because we would understand that you have a lot of staff in Australia for which you would now have to dole out higher wages, which explains the drop that we've seen in your international securities margins.
Hi, Rima. I think our contracts are basically have inbuilt rise and fall clauses. So as minimum wage goes up, we basically pass that through into our invoices. There is no renegotiation of contract as such. It's simply a pass through. But yes, there is a little bit of a catch up because we have to start paying minimum wages upfront. Customers take a few months to actually process that. They pay us arrears, and the new price becomes effective going forward. So there will be a little bit of catch up impact that you might see in the next 1 or 2 quarters. But on a steady state basis, this is fantastic news for us because it does 3 things. Number one, the revenue goes up as a result of minimum wage increase. Number 2, we have a corresponding impact on the EBITDA. EBITDA in dollar value goes up. And number three, higher wages result in better retention of manpower, lesser shortages, which actually is good for operations and business continuity. So I think it's overall very good news for us.
Okay, so you expect margins to improve then in the international business as well. By when? Because you had indicated that gross margins are constant, they are improving, and that's the reason you expect margins to scale back to that 5.5% to 6% level. But by when do you expect that?
No, so let me correct you here. The international business pre-COVID was operating on a 4.5% margin. International business will settle around the 4.5% margin level now as well. That should happen in the next 1 or 2 quarters. Overall, SIS consolidated was ballpark 5.5-6% EBITDA margin. And we hope that we will settle around 5.5-6% in the next 1 or 2
Yes, I was asking you about the consolidated number only, and that is what I wanted to know. You will settle around 5.5 to 6%, but by when do you expect it? By, because there were a lot of headwinds, but what's happening now there?
No, I think I can tell you that the good news is that on the India business side, which is now more than 55, close to 60% of our overall revenues, you will see very robust growth in security and FM. Last quarter as well in Q1, we reported very strong numbers for FM business. This quarter, it's, the last 3 months have been very strong on the growth side. And also you will see significant margin improvement because as revenue goes back up, the costs are, getting distributed, and therefore, the margins are showing uptake both in security in India and in FM in India marginally. So overall, I think we are moving in the direction that we had indicated earlier. India business is definitely going to show a margin uptake.
Okay, so you expect an improvement in the India Security Solutions business, but do you think you could end FY23, that's the March quarter, with consolidated EBITDA margins more than 5.5%?
That's the goal. Okay. I think Q4 is the critical quarter we are pushing for. And, before we get into the next financial year, we want to get into a good base and work from there. But as of now, I think we are pretty much on track to get into that 5.5-6% zone by the 4th quarter of the year, especially on the back of India business improving its margin profile. And number 2, international business getting this massive minimum wage hike, which should be able to, be passed through to customers in terms of price revisions in the next 1 or 2 quarters. Okay. So Q4, definitely.
Rituraj, last question before we let you go, since you are talking about India business looking up, what is the average deal size or the current monthly run rate? It has been increasing over quarters. So what is it looking like now?
I think I would abstain from sharing that number, but we are, I will be disclosing that when we get into the results season. But we are. But
is it better than Q1? If you can qualitatively tell us that.
Absolutely.
Okay. All right. So
we are run rating significantly better than in the first quarter, especially in India.
Okay. All right. So we take your word and we'll speak to you again when your earnings are out. Thanks a lot for joining us today and taking us through what's happening as far as the international and the domestic business of SIS is concerned. That's the word coming in from the company. But for now, we'll slip into a short break. But before we do that, here's some great news for investors. You can now track US market actions real time on Money Control. Log on to Money Control website or app and stay informed about all that matters in global markets.
Welcome back. While the Nifty is holding above 17,200 and managed a recovery of close to about 130, 140 points from the day's low, the midcaps is still sulking. The midcaps are underperforming today. Midcap index down 1.2%. But let's get to our midcap spotlight segment. Nigel is putting the spotlight on Gravita India. Stock is up 3.5%. Nigel, what's the news?
Well, that's right. Gravita is doing well in today's trading session, and there are 2 pieces of news that have really come out. One is in terms of the shareholding pattern. Now, there was a big entry that came in from Abu Dhabi Investment Authority. They have bought close to around 5.5 lakh shares a couple of sessions ago. But what happened before that is more interesting. Atul Kuchal, he had a stake of close to around 2.1% stake in the company. That's roughly around 14.8 lakh shares. Now, on October 6th, he sold a bulk of that holding, close to around 9% odd. And on October 7th, he went ahead and sold the remainder. And, you know, in lieu of the shares, I mean, he sold 5.5 lakh shares, and Abu Dhabi Investment, they bought that 5.5 lakh shares odd. So two factors played out here. One is that pending sale by one of the investors, that's out of the way. And the second factor is that a big reputed name comes in. So that's point number one. The second point that we're looking at is Gravita. They have started an aluminium recycling plant in Senegal. Remember, this facility will have capacity of close to 4,000 metric tons odd on a per annum basis. They could do revenues of close to around 60 crores per annum with gross margins of around 20%, which is much better than what they do. And remember, they invested only around 3.5 crores. For the past year, well, it is reasonably small in comparison to what they did. They're around 2,200 crores with margins of around 10%. But it appears both these two news points have fired up the stock. Back to you.
They have, and how. Thanks a lot, Nigel, for analyzing what's happening in this particular counter. Moving on, the other space which is doing well is defense shipyard stocks. They are buzzing in trade today. Mangnam is here with more details on this one. Mangnam, what's happening here?
Well, a lot is happening in the defense space. We've been talking about the way these defense stocks have been buzzing around, but now things are getting a lot more specific, and in that it is the defense shipyard space. So not only today, if you just take a look at over the last month or so as well, there's been a 25 to 35% jump in the share prices of names like Mazagon, Dock, Garden Reach Shipyard, as well as Cochin Shipyard as well. This year itself, two out of these three stocks would have doubled your money, and one of them would have given you 50% returns, which is much more than what the Nifty or the Midcap index would have given. Everyone's talking about the big opportunity in the defense sector over the next 10 years to be almost 9 lakh crore odd rupees. But in that, the Navy vessel could actually be around 2 lakh crore. And indigenization, which is the key theme that we're watching out for, there is a 39% indigenization headroom for Indian navies itself. For defense shipyard, Antique had written earlier that, it's a $60 billion opportunity. Indian Navy has to scale up from 137 ships to around 200 ships by 2027. And were that to happen, the overall market, which is around 4.5 lakh crore or $60 billion that they're assuming, would see some gains coming in for the shipbuilding sector as well. And ship repair, which would be around 18,000 odd crores. Aircraft carriers would be around 45,000 crores, and nearly submarine requests worth nearly 2.2 lakh crore as well. What does this all mean in light of the way these stocks have moved and their valuations? Typically, these companies would trade at much lower valuations, a little over mid-single digits. But now, after them having doubled, they're trading at around 10 to 15 times FY24 earnings, higher than their average historical averages. But definitely, the opportunity in this space, like I mentioned, is huge.
Okay, all right, Mangnam, thanks a lot for that. Those stocks are higher. Garden Ship Builders is up 14% in trade today. So good going for these stocks. But with that, we'll take your leave in this edition of Midcap Radar. Inside Out when we return.